Good morning, everybody. This is Todd with the Forex Nitty Gritty Insiders Daily Video. Midweek here, and the market has been moving fairly choppily here, I'll say. We obviously want movement. We just don't want it too choppy, but we want it to be deliberate in its movements. What I want to talk a little bit about today is the idea of this simple trading method that we talk so much about on a 5-minute chart. And I'm going to use 5 minutes to illustrate shorter time frames. So it could be a 1 minute, a 15-minute, anything under an hour in time period is going to be a shorter term type of a chart. Now, yesterday we talked a little bit about the hourly charts, and the day before that we talked about the daily charts. And so as we go through and look for opportunities to trade, sometimes taking the shorter time frames can be beneficial to help us in understanding and learning how to go through the process of the simple trading method. The rules are not different. We look for the trend. We look for support or resistance. And then we look for either the highest high of the last three or the lowest low of the last three, depending upon the trend. So as we take this down to the short term, it gives us more opportunity to trade because it gives us just more opportunities. Now, when we trade smaller term, generally what we're going to find is that our stop losses are smaller and our take profits are smaller in relationship to the longer term hourly or daily charts. So on a 5-minute chart, we can go in and we can, put something to help us identify the trend. So we'll use a 40-period simple moving average. If this 40-period simple moving average, on here 40 SMA, is up, then we're going to buy if it is at support. So what I mean by that is right here you can see that the moving average started to go up, ran up, and then it pulled back to some support. Now we're going to use the moving average as support. We could look back and say, okay, well, there's some pretty good support all in this area, which correlates with this moving average. So at this point, as it pulls back, I'm going to look at the highest high of the last three, which would have been right about there, and put a buy, stop, order in so that I can get in as the price begins to recover in the direction of the trend or the moving average. You can see that we had another time where it pulled back. The entry here would have been right there, and so forth and so on. And so take some time to look at these shorter terms, because they do give you the ability to have quick trades. Now, as we go out and look for other opportunities, we can change, pairs. We can look out at past history. So we can scroll back And we go back and say, okay, what would happen here, and where would I have a possible entry? And as we pick these out, here's a point where it came back to the moving average, and it started to move up, and finally right here moved above the highest high of the last 3. Now, like I said, the difference is that our amount that we're targeting is, 5 or 10 pips, not, 20 or 30 or 100 pips, depending upon the time frame. So we want to have our entries. We want to know when we're going to get out, both our take profit and our target. And generally, if we get in, we're going to put our stop loss just below the most recent swing low in order to minimize our risk. So take some time to go through and look back at the 5-minute chart and see how you could have taken trades. And then look for opportunities going forward doing the same thing. Now, you could do the same thing on a 1-minute chart, and you would be able to have even more opportunities. But the idea is that if we use a smaller time frame, we're going to be able to find more opportunities to practice using this. So if you have questions, let me know. If not, we'll be back tomorrow. Have a great rest of the day trading, and we'll talk to you soon.